you got to have a beneficiary, and you need to be honest with your beneficiary on what you want with your money when you're going. One of the key things that I've done within my will as a single man is I put in there my beneficiary goes to my biological mom and my biological dad. And so inside of my will, I tell them what to do with my money.
Right.
Okay, that's very important because I don't think y'all understand. If yeah, you can pass, right? And let's say you do have life insurance and you give it to the beneficiary, but you don't tell the beneficiary what you want to do with the money. They can do whatever they want to do with the money. All right. And so inside of my will, I break it down. I'm like, all right, cool. Mom, Dad, this is what I want you to do. I want you to give X amount of dollars to my local church. I want you to give X amount of dollars and put it inside of this particular fund for my niece and my nephews for their college fund. Mom, Dad, I want you to go put this X amount of money into a particular nonprofit that I support and that I endorse. And then Mom and Dad, I love you all. Thank you for being my mom. Thank you for being my dad. Thank you for bringing me in. The rest of this money is for you and your particular spouse. But I want to pause right there and park it. The reason why the will is so important is because you don't want the state to govern your assets. And you don't want the state to tell your kids who will actually raise them. So a will, you guys, is so important. If you could do a will and have a trust put in place, it covers all of your assets. It covers your kids. And then it allows you to, when you leave, there's no argument over your funds, over your kids, over your assets. It is clear as day. Unfortunately, my cousin passed last February, actually February 12th of last year, and she just dropped dead, and she didn't have a will put in place, and she was 26, 27 years old. And that was probably the hardest season of my life to watch that because she was my favorite cousin. And to this day, they're still having to go through the state to get certain stuff. To this day, they're still having to, her parents are still kind of somewhat having some conversations on what they're going to do with this and with that. And it was simply because, one, she didn't have a will put in place, so they had to, raise funds. Two, she didn't have a will. She didn't have life insurance put into place, so they had to raise funds. And then two, she didn't have a will. So I want to put that in and park it right there because this is all important, you guys.
Yes.
This is very, very important. Having a will and having a life insurance policy in place at 20 is very, very, very important. And I really want, so I'll make sure to add that link. It's a free will generator. You can do that yourself. Go get it notarized and boom. I started off there, and then as my assets and my wealth starting to build up more, I went ahead and had my attorney draft up something a little bit more polished and a little bit more specific for my different stuff. But the majority of you all watching right now can do this free thing and get down with Ethos, and you'll cover it. And so I know some people are watching right now, Rashida, and saying, this is great. Okay, cool. I'm loving this. I hear you about getting a will, Ayo. I hear you about getting life insurance. I hear you that you all are saying it's inexpensive. It's not as expensive, and they're really not, you guys. I'm telling you, for my insurance policy, which I'm in the millions, right? Yeah. I am not even paying above $150.
Nice. That's awesome.
Like I'm very affordable now. I don't want to come up missing. You know what I'm saying?
Let's not do that.
I don't want to come up missing, man, because after the show goes aired, if I come up missing, you ain't the beneficiary. You know what I'm saying? So I don't want to come up missing. So I won't say too much because I don't want to put myself out there like that. But I know some people are watching right now saying, okay, I hear you. They're affordable and they're accessible. But Anthony, I have some pre-existing conditions.
Yeah.
Are you all still affordable? And better yet, not just affordable, because there's some insurance companies out there, they can't even get a policy.
Right.
One, let's do educational. Let's do educational piece, 2 piece, if you can do this. One, why do insurance companies turn down people with pre-existence? And then 2, what does Ethos do? Can they still rock with Ethos if they have a pre-existing medical condition?
Yeah, so you're surprised how every carrier and every company is different on how they assess risk, right? So they take those things like your health conditions, your background into account, and they calculate for themselves whether they want to take a chance on you or not, right? So some companies are just way more strict, right? They just say, like, if you're not, this high earner, if you're not, the healthiest horse ever in the world, then they don't want to take a chance on you.
Yeah.
Right. And one of the things that Ethos really cares about is that accessibility piece and making sure that we actually have something for everyone. So even if you do have pre-existing conditions, let's say you have, some type of issue or a disease or something to that effect, there is a policy out there for you. Even if you don't get $1 million, $2 million in coverage, you'll have something to take care of your loved ones, and you're able to find something that takes care of your needs regardless of your background. Because if we access all of you, like not just one part or another part, we assess all of who you are, and regardless of whether you have pre-existing conditions, you can still get coverage.
Man, and that's important. I love how you said you may not get the $2-3 million, but you can get something.
Yeah.
And something in today's day and time is better than nothing.
Yes, it is.
With inflation up right now, we don't know when inflation is going to go down. We prices are rising. Let's just make sure that we think about our loved ones.
Yes.
And let's help them out. Let's serve them. So let's get to the details of this, because we talked about what life insurance is. We talked about the importance of why life insurance is important. We talked about how life insurance could be expensive for some, and for the majorities, it will not be expensive, especially if you use Ethos. And if you all saying, this is great, where do I go already? I'm halfway through this show, and I wanna sign up and go check it out. Go to AnthonyONeal.com /ethos. That's AnthonyONeal.com /ethos. For those of y'all listening on podcasts, I'll drop everything in today's show description. And I promise you it will not take you long. But I want to walk through the process of, one, how do you all calculate how much life insurance someone needs? Because what I do love about Ethos is y'all's heart is so pure, right? You all love people, and you all want to help people win. And so you guys, Ethos honestly operates a little different from other insurance companies. None of their agents, none of their staff get paid commission off of what you do and off of what you purchase. So if you get on the phone with someone to get some more clarity, which they would love to do with you, they're not going to try and sell you something. Their computer is not trying to sell you the most expensive life insurance package. The computer is saying, okay, this is the best package for you. So let's talk about that. Like, how does someone calculate, it's even take Ethos out of it, how much life insurance do I need?
Yeah, right. And it's not something that you can actually think about offhand, right? There's a couple of ways in order to do this, right? So one simple and easy way is to just think about your income, right? So if you're making $50,000 a year, you can multiply that times 10 or times 12, and that will be like the baseline for your coverage amount. So if you're making $50,000 a year, your baseline minimum amount is $500,000 worth of coverage.
Yeah.
And that's one simple and easy way to do that without taking a whole lot of other things into account.
I love it. Now, on the pre-record, because we was practicing, because I didn't hit record, you broke down this whole analogy, which I really love. Yeah. And you said one of the analogies was dime.
Yes.
Let's break this down, because that's a great teaching moment that I think that I love. That honestly, I'm gonna steal that from y'all. I'm gonna start teaching that. Period.
That's fine. You can have.
You know what I'm saying? Because I mean that's honestly a great thing to look at. Now, dime stands for debt, and then when you say debt, that's like all debt, right?
Yes, consumer debt, credit card debt, all debt.
All that. So they got to add it all up. Debt. The next one is the income. You gave the example of $50,000.
Yes.
And then the next one was mortgage, was another form of debt, but this is an asset debt. So the mortgage, right? Yeah. And then education. Now, when you say education, are you talking about the student loans? What are you talking about?
I wish that would be great. But no, it's more for your children's education.
Your children's education.
Yes. Like college tuition, or they're paying for private school or something to that effect, making sure that those bills are covered.
Yeah. Boy, I wish I could plug into the computer right now, CJ. I would love to put this up on the computer because I did some math. So let's just break this down, you guys, because this is just some good practical information for you, right? Let's say you have $60,000 in student loans and $40,000 in other consumer debt, car notes. I mean, this is going to be everything. You guys know this. This is not new to you, especially on my channel. Car notes, credit cards, student loans, private loans, personal loans, payday loans, family loans. You know, any kind of debt. And debt is simply what have you borrowed that needs to be paid back to anybody. Anytime. So let's say, for an example, with everything added up in your debt, you have $100,000. That's excluding your mortgage, right? So baseline right there, you need a $100,000 policy. Then, like what my sister just said, income, and I love how she said it 10 times because I teach, get 10 times your average salary. So if you're making $50,000, like she said, that's $500,000. But the average American is making $46,000 a year. That's $460,000 that you need to get. But let's stick to my sister's math. Okay, she said 50,000. We're gonna stick with 500,000. Then mortgage. Let's say you have a good mortgage in America, and you're at about $350,000 for the mortgage, right? And then education. I wrote the book on education, debt-free degrees, the #1 national best-selling book in the world 2 years ago. Sold over 300,000 copies, man. I'm loving it, right? And so I did the research. So let's just say down the road, to get a 4-year degree, you're gonna be looking at about $110,000 to get a 4-year degree if it's in-state. If it's out-of-state, it's way more money. But y'all know me. You're gonna put in your will that you're gonna pay for your kids' education as long as they go in-state. Okay, if they go out of state, they got to pay the bill. They got to pay the bill. So using her dime method, debt, income, mortgage, you need $1 million in life insurance.
Yeah.